Subsidiaries deals with aggregates. There's analysis of the acquisition in the notes. That obviously is dealt with in much more detail in another subject, so we're not going to cover that in a lot of detail here. Non-cash transactions, we're looking at cash flow statements. This is non-cash, they're excluded. We're not worried about a situation where cash isn't moving, which makes a lot of sense. You're probably going to have note disclosures about these things. It's worth having a look at paragraphs 43 to 44, but in terms of what gets included on the face of that cash flow statement, it's not something which goes in there. You've got to have a reconciliation between the balance sheet. So if you see the balance sheet, you're going to have an opening balance of cash, you're going to have a closing balance of cash. Hopefully that difference, you should be able to add up and have a reconciliation between how the cash flow statement, how the cash flow moves between the opening and the closing balance. That should all triangulate. And one last one, and I'll explain this because you may not have come across what these things are. You've got to have disclosures around unused facilities. Now, what we mean by unused facilities, and if anyone has gone and applied for credit cards or gone and applied for personal loans or home loans or car loans or whatever, you may not know it by this term, but you will know what I'm talking about. So what are the sort of things, if you're trying to sign up for a credit card, if you're trying to sign up for a bank loan or get a car loan, what sort of things is a bank worried about, or what sort of things does a bank ask you?
Your income.
Yeah, they want to know what your income is. So what's the equivalent of your income for a company, roughly speaking?
Revenue.
Yeah, revenue or profit. So they want to know revenue, and they'll probably want to narrow it down to profit and loss, but they want to know that side of things. What else do banks want to know about you?
What you have to pay your expenses.
What you have
to pay, which you're obliged to pay, so like a phone bill or other.
Yeah, so they want to know what kind of your general outgoings are, which actually kind of tags into your point of they want income and they want to know what your outgoings are. So picks up. What else do they want to know? Credit history. They want to know, have you defaulted on stuff?
Debt to equity.
Debt to equity. So what feeds into debt to equity?
How much debt you have.
Well, how much debt you have is going to be a big part of that. So they want to know what other money that you currently owe. There's something else they do want to. There's another thing which is they quite commonly ask, which kind of feeds into your debt to equity. I want to know what you own. Do you have a car and what's its value? Do you have property? Do you have cash sitting there? They want to know what you've got. They want to know your assets. So that's really similar to what we see in a profit and loss statement and a balance sheet. They want to know what your assets are. They want to know what your liabilities are. They want to know what your profit is. Basically, they will definitely look at credit history. That gives you a timeline idea of how you've been going with these payments. One of the things they want to do as well is they want to know, they do actually ask you this, what your unused facilities are. And this came about when I was getting my car loan back a few years, because I got my car in, what year is it now? 2013. I got my car in 2009. So it was sort of just after the cusp of the GFC. Now, if you may be too young, but sort of pre-GFC, you couldn't wake up or have a new day without getting a letter from a credit card company offering to open up a credit card. Say, look, do you want to just have free credit? And one of those situations, I got a letter from Citibank saying you can have a credit, not a credit facility, it wasn't just a credit card, but you can have this. It's like 2% interest for the first 9 months. I went, look, it might be handy to have, I may not use it, and there's no cost to using it or opening it. So I went, yep, I'll sign up. I had $15,000 sort of basically almost like a credit card set up to say, I'll have this. I never touched it once. I even forgot I had it. I then so I did that a couple of years before I got my car loan. Once the 2% rate finished after the 9 month, it jacked up really high. I forgot about it. I went to then get the car, and they're doing the credit checks, and they said, well, like, I completely forgotten. They came back and said, well, hang on, I didn't owe money on it, but I had it there. And they were like, but you've forgotten about this. They actually want to know not just what you owe to banks, but they want to know what facilities and what lines of credit you have as well. So if you've got a credit card which say has a $12,000 limit, and if you owe $5,000 on it, they want to know the $5,000 that you owe. They also want to know about the limit because they want to know that you have capacity to go off and borrow $7,000 without getting any further approval. So if you think about the ability to just get access to cash, you could have access to $7,000 just by going to the ATM or going to the bank and just pulling money out, or going to the shops and just start spending. They want to know this because if someone is coming to lend money to you, or if someone's coming to look at your position, why do you need to borrow money from me? Because you already have access to credit. So they want to know that information, and that information needs to be disclosed. So if you want to think about it from a personal point of view, an unused facility is like the unused portion of your credit card. So at the end of the month, the bit that you haven't used is the unused facility. We've got to this slide and then we'll get to the lecture demonstration. So we've got to understand the definition of cash, the implications that this has for the cash flow statement, why prescribe disclosure. And so as we run through that relatively quickly, let's get to the practical demonstration.